Last time we touched on RSUs versus stock options, but we heard you wanted more details. So today we're breaking it all down. Pros, cons, and what to consider when making your decision. All right, Mike. So what is stock options and what are RSUs?
All right, so in this context, we're talking about employee stock options and restricted stock units or RSUs that people get from their employer as part of their overall compensation package. A stock option is an option to buy shares in the company at a specified price at some time in the future. Typically, stock options will have a 3-year vesting period. And then after they vest, the employee typically has 7 years to exercise them. So, for example, you work at ABC Company and they say, hey, you're doing a great job. We're going to give you stock options and your strike price is going to be $10. The stock is trading for $10 in the market now. It takes you 3 years for those options to vest. And when those options vest, the hope from the company is, and for you, is that those options will be worth more than $10. And then if you get 1,000 options and the stock is trading at $15, you could exercise those 1,000 options. And what is income for you is the difference between $10 option price and the $15 exercise and market price. So you'll pay tax on the difference on those, but then you're going to get those shares cheaper than you would have gotten. Um, Restricted stock units are another compensation form given by employers. And in a restricted stock unit, typically there will be a 3-year vesting period. And then, but once they vest, you have the stock, and that stock will be taxable to you. And so sometimes you have to come up with the money to pay the tax on the compensation. And then in a lot of cases, what they'll do is they will figure out how much tax should be withheld, and then you'll get the net of those options. So say you get 300 restricted stock units and they want to withhold 30% for tax, what'll happen is your gross will be 300 units, you will net 210 units, and then you'll have 200 shares of stock. And so they're both are very common. I was going to say options, but that would be confusing. Both are very common forms of compensation by large employers in this area. And often people get a choice what to receive, whether they get options or RSUs. That was the point of the prior video, like which would you choose should you have the choice? And there's no right answer. It depends on your circumstances, your situation, and your risk tolerance. We'll go into that, I think, with later questions. But
Yeah.
that's the very quick example of what stock options and RSUs are.
Okay. All right. So what would you say the main differences between stock options and RSUs?
So the main difference is that stock options come with a much higher risk reward profile, right? With the restricted stock, you're just going to get the stock in the vesting period, which is typically 3 years. So if you have RSUs for a certain amount, you're just going to get them as long as you're still with the company. With the options, the price that you can exercise when you have the ability to exercise may be way higher or could be lower. We have clients, we had a client meeting last week, and her current options for a large pharmaceutical company are below, like the market price is below the price that she could exercise the options at. So the options are worthless to her right now. Now, there are other times, though, when she's come in, she's been a client for a long time, when her options were worth a lot more than what the equivalent RSUs would have been. So I think the biggest difference is how risky they are and what the potential rewards are. And so the thing is, there's no right answer as to whether you should choose stock options or RSUs. It really depends on your personal financial situation and your risk tolerance and goals. So this client now in the past has chosen more options or more RSUs. And right now she's at a point where she can retire safely soon, and she's going to choose all RSUs this time when she has a choice because that's the right choice for her. She could have a direct report that should choose all options because of where they're at in their life. So there's no real right answer for everybody. It really depends on your personal circumstances.
How are they taxed? Are they taxed differently, stock options versus RSUs?
Sure. Now, in this video, we're only talking about non-qualified stock options. There's something else called incentive stock options that we see way less frequently. We're not talking about them in this video. These are just NQO or non-qualified stock options. For stock options, you are taxed basically on the benefit that you get. So if the difference between exercise price and the market price, like what your benefit is what you're going to be taxed to when you exercise the option. And so some companies will offer like an cashless exercise and sell. So you exercise and then sell them, and then you just get the net proceeds and they withhold for taxes. Other times you might have to actually put cash up to exercise. And if you're going to exercise and hold the stock for the long term, then you will need to put cash up to exercise. Although some might also do a cashless exercise and hold. RSUs are taxed when they vest. So if you hold them for if you have RSUs and it's year 3 and they vest, you either will have to pay the tax, have it withheld, or they will give you like the after tax equivalent. So again, like I said a little bit earlier, if it's 300 shares and they want to withhold 30% for taxes, then you'll get 210 shares. But at that point, in both examples, then you have the shares. Any kind of gain or losses after that will become capital gains or capital losses. And they'll either be short term if you hold them for under a year or long term if you hold them for longer than a year.